All right, so you will get to know all the secrets of the fair value gaps. Which one are the strong fair value gaps? Which one are the weak fair value gaps? Again, the fair value gaps alone lead you to a draw on liquidity. If you know how the fair value gaps are acting, what story they are telling, then you are a master at finding your draw liquidity. Then you are a master at finding your entry. Then you are a master at trading. So I will share everything you need to know here to get to identifying strong and weak fair value gaps, which automatically leads to your draw liquidity, your entry, because all you need in the market is fair value gaps. So leave behind all the unnecessary, fancy, stupid PD rates that you don't need. It's all a distraction. Don't get distracted. Master one PD array and you master the market. In the previous video, we went over high probability order blocks, so strong order blocks and weak order blocks. Now, for a strong order block to be created, we need a fair value gap, which we mentioned in the previous video, but price will not always retrace into that order block. Sometimes it will only sting into that fair value gap and then continue higher or continue lower. So how can we find those strong fair value gaps and how can we find those weak fair value gaps? And just having those order blocks and fair value gaps, that is all you need. First off, we have NASDAQ September contract right here. Now, I need you to understand, I'm going over NASDAQ, so I'm going over the indices right here. But this is the same for every market. So for Forex, whatever you can think of, it's the same thing. We can see that we have a monthly fair value gap sitting right there. Now, if we are going higher, where are we likely going higher from? That monthly fair value gap can push price higher. How can we know if the monthly right there wants to expand higher off of the fair value gap alone or the overlapping part? That is exactly what I will teach you right here. Because if we dive into the daily time frame inside that monthly fair value gap right there, here we are on the daily time frame inside that monthly fair value gap that is sitting right there. And the first rule for a strong fair value gap is that it is in context of the time frames above it. What did we go over in the previous video? The daily needs to be in context of the weekly and the weekly needs to be in context of the monthly. So if we actually go up one time frame and we look at the weekly as well, then on the weekly right here, what can we see? We have this fair value gap right there. Now, why is that a weak fair value gap? Because it is not in context of the monthly time frame. Again, why is that? Just a quick summary, because the monthly is the stronger time frame. The higher the time frame, the stronger the time frame. So if we have a weekly fair value gap right there, that is not going to be strong. Why not? Because we have a monthly fair value gap just below it. So price is always going to reach for the PD rate that is on the time frame above, that is on the highest time frame. That is what price wants to reach for. And again, the reason for that is because institutions, they work off of the highest time frames. So if you want to follow them, then you need to incorporate the higher time frames. So this is a weak fair value gap right there. Then if we go into the daily time frame again, then this again is the weekly fair value gap that we talked about right there. Then this is the monthly fair value gap right there. Then we can obviously tell that all these fair value gaps on the daily time frame are also low probability, are also weak fair value gaps, because price is willing to reach towards that monthly fair value gap. Does that mean you can't take any trades off of this weekly fair value gap? No, of course not. Because price will likely still show some kind of rejection when coming off of that weekly fair value gap. But it's just keeping in mind that when we do come into that weekly fair value gap right there, that we are not aiming for the moon. So we are not aiming for absolutely new all-time highs. No, we want to be very careful. And what can we target? Well, what do we have right there? A daily fair value gap that is sitting right there. And then if we dive even more in depth, what do we see here? Right there, if I remove this bearish fair value gap and I mark out this fair value gap, why did price not push higher off of that fair value gap? Well, what is below it? A weekly fair value gap. So this daily fair value gap that is sitting right there is not in context of the weekly. So this weekly fair value gap is not in context of the monthly. So what will price likely reach for? The monthly fair value gap right there. You might still see rejections off of these, but shorts are the higher probability positions right there. Not taking a long, so not buying. You want to sell ideally. And for selling, you can aim for more. So if we actually follow price down into that monthly fair value gap, we create a bearish fair value gap right there, coming into that weekly fair value gap. How can we know that that weekly fair value gap will likely not hold? Well, what is it doing? It is not creating a new fair value gap higher, is it? So the fair value gaps are again telling you a story. You need to understand, fair value gaps are there to show displacement. A displacement is fair value gaps. So if we are following orders of some kind of institution that is above us, that is the big whale, etc., then what will they leave behind? Of course, fair value gaps. So the fair value gaps is always what you want to follow. So that is why the fair value gaps alone are telling you a story. The creation of a fair value gap is telling you a story, but also the non-creation of a fair value gap is also telling you a story. And that's what a lot of people don't see, because when price is willing to expand higher off of this weekly fair value gap, what should it have likely done is make a new fair value gap higher off that weekly fair value gap. Again, on the 15-minute time frame, of course, it made a fair value gap higher. You want to look at the time frame just below it, right there. Not going into the 1 hour, because of course, then it creates a fair value gap higher. So if we read price action again right here, then it's coming into this area right there. Coming into that daily fair value gap, the bearish daily fair value gap. That is where price is now in no man's land, as I like to call it. Where price is rejecting of the weekly fair value gap. It is also encountering a daily fair value gap. Now, which one is the stronger one? The weekly fair value gap is, of course, the stronger fair value gap. Why is that? Because the weekly is the time frame above the daily. So the daily time frame needs to be in context of the weekly. But we have a monthly fair value gap just below all this price action. So the daily and the weekly need to be in context of the monthly. So what you'll see right there is that price in this area is in the middle of nowhere. It's in no man's land. It's in between premium and discount. So it will mess around a lot right there until we get a new fair value gap. This new fair value gap is extremely high probability. Why is that? The first rule we had is that everything needs to be in context. So the time frames need to be in context of one another. Then the second rule is that a fair value gap that disrespects another fair value gap is high probability. It's a strong fair value gap. What do I mean by that? Here, these daily bullish fair value gaps right there are getting disrespected. Now, again, disrespect is when we are closing below those fair value gaps right there with clear bearish intention. What is clear bearish intention? Clear bearish intention is displacement. What is displacement? Displacement is a fair value gap. What is a fair value gap? A fair value gap is a 3-candle pattern. So we have everything defined right there. So we have this bearish fair value gap lower that is disrespecting that fair value gap right there. And then it's also showing early signs of disrespect that fair value gap right there. Now we have this bearish fair value gap right there. Is that getting disrespected? Well, on a candle closed base, we might say yes, but we don't have bullish fair value gaps. So is that getting disrespected right now? No. So which one is the stronger fair value gap? That bearish fair value gap. If those bearish fair value gaps are the stronger ones, then that automatically means that these fair value gaps on the downside are the weaker fair value gaps. So those weaker fair value gaps, can we expect them to push price higher? Again, they might reject. So we might see a little rejection, but will they hold? No. So what can we aim for? That monthly fair value gap right there. Again, we are not having a bullish fair value gap higher. We are creating a new bearish fair value gap, which disrespects that full daily fair value gap and that weekly fair value gap that is sitting right there. So what happens? This daily fair value gap is your high probability, your strongest fair value gap sitting right there. That is what you want to trade off of. With target, that monthly context, that monthly fair value gap sitting right there. Once we reach that monthly fair value gap, you want to again read the fair value gaps itself. So here on the daily time frame, we have bearish fair value gaps coming into a PD array, into that monthly fair value gap. All right, perfect. So what do? We wait. Why do we wait? Why do we not take a trade off these bearish fair value gaps? Because we're in a monthly fair value gap. So ideally you want to wait. That is the highest probability. Afterwards, we create a daily fair value gap higher sitting right there. So is the daily right there in context of the monthly time frame? Yes. So this is a strong fair value gap right there. And why? It's in context of the monthly. Rule 1. It disrespects another fair value gap, that bearish fair value gap right there. Again, what is disrespect right there? It is closing above that fair value gap right there. That is exactly what we want to see. In context, of course, of the time frame above it. Then afterwards, what do? We create a new fair value gap higher right there. That new daily fair value gap. And now we are going to pay attention to the details again. it is all fractal. So what I'm going to tell you here applies to the monthly as well. That is why I wanted to break it down in this way. Because when we look at this fair value gap that is sitting right there, that fair value gap is a standalone fair value gap. So that fair value gap is not overlapping with another discount array. Then we also have this fair value gap that is sitting right there. That fair value gap is overlapping with this discount array right there. So you can count that as two discount arrays that are sitting right there. This fair value gap is only one discount array. That is important to understand. So we have one and we have two. So what price is going to do? Price is wanting to go higher off of this fair value gap right there. If price does not go higher off of that fair value gap right there, then price is going to aim for the overlapping fair value gap sitting right there. This small area in between is not where price will want to go higher off of. If it does want to continue higher, it will continue higher off of that overlapping part right there. Why is that? That is because this fair value gap right there is 1. This small area in between that order block and that fair value gap is also 1. So they are equal. Then when you have two equals, then if price doesn't continue higher off the first equal fair value gap, so the exact same fair value gap that is sitting right there and there, then you can see that as both those fair value gaps are 1. They're one discount array. So if it doesn't continue higher off the first one, why should it off of the second one? Then if price wants to continue higher, it will retrace into the overlapping part and continue higher off of that. That is extremely important to understand as well. So if you follow along with me right here, and we look at these individual candles, this daily fair value gap right there, that Friday came into the fair value gap right there, that down candle, and it didn't push price higher. All right, that's a little bit worrying. Why is it not pushing price higher? Then the next one, this candle right there, that Tuesday. Again, why not a Monday? The Monday was a USD bank holiday. That Tuesday right there is coming into the fair value gap a second time. When price trades multiple times into a fair value gap, that fair value gap is already, for me, a weaker fair value gap. Now, again, this fair value gap, this daily fair value gap also was traded into multiple times. But why is that? Because what did we go over? That weekly fair value gap. So this right there is no man's land. That is where the daily fair value gap is still stronger, but since we also come into that weekly fair value gap, we are battling between discount and premium. So it's like thunder. We are battling between good weather and bad weather. And whatever the context is right there, that will win because we had the monthly context going lower right there. So that is when you can expect this to happen in the daily fair value gap. But right here, we didn't come into a weekly fair value gap. So right there, when this happens, that tells me that price wants to reach for this overlapping part right there. So that Wednesday is extremely clear because that Wednesday is your drawn liquidity. Now imagine if you had this candle and you knew this candle, what I wanted to do, and it was a monthly candle because that's exactly what we're doing here. You have a lot of price action to work with, and that is exactly our goal. So then afterwards, we also create a bearish fair value gap right there. And then what are we seeing? We are coming into this fair value gap, and now we are consolidating right there. And this is where it gets interesting. Right here, we are on the next contract. So the next NASDAQ contract with more price action to work with. So after we came into this overlapping part with that fair value gap sitting right there, then right here, if price wants to continue higher, then again, the non-creation of a fair value gap is also telling you a story. Why? Because when we have this discount array sitting right there, that overlapping part, and we are not creating a new daily fair value gap higher, what is that telling you? The price has no bullish intention anymore. And what do we see? We do have this bearish fair value gap right there. So again, do you need to get involved in this price action right here? No, that is no man's land. But what can you see afterwards? You can see that we are again creating a new bearish fair value gap right there. Now, do we need to trade into that bearish fair value gap right there? No, we don't necessarily need to, because that bearish fair value gap already is telling us what? It is telling us that the next daily candles will aim for this low right there. Why is that? What have we just done? We have just read if the monthly candle wants to create a new fair value gap. Because if the monthly candle wanted to create a new monthly fair value gap higher, then this daily fair value gaps right there should have pushed price higher to create a new daily fair value gap. Because that, on the monthly, if we zoom out, that would have created a new monthly bullish candle. To create what? To create the second phase of a fair value gap, because you have the first phase, the second phase, and the third phase actually create the fair value gap itself. But what did we also go over on the daily time frame? We mentioned, if we zoom back into the daily, we mentioned that if price is not continuing higher off of that first fair value gap that is sitting right there, that is that standalone fair value gap, then price will reach for the overlapping part right there. All right, that is interesting. Now let's take that concept and zoom out to the monthly time frame. Because on the monthly time frame, what are we seeing right there? We are disrespecting that first fair value gap. So what will price reach for? This overlapping high that is sitting right there. So that right there can be your draw on liquidity. And now you have the monthly to work with. So you have a lot of price action to work with. Now, again, what would be your first draw on liquidity? Your first draw on liquidity would be that previous month's low, once you saw the disrespect on the daily. The second draw on liquidity is right there, that new monthly fair value gap. But this monthly fair value gap, this area is the same as this fair value gap. So again, they are equal. They are both 1. So price wants to reach for a 2. Because if it's not continuing higher off that first one, why should it continue higher off that second one? They're both equal. So again, then you again want to go into the daily, into the weekly to see, does price indeed want to reach for this draw liquidity right there? And you use the fair value gaps. So right now, let's remove all this right here. If price wants to continue lower, what will it likely continue lower from? Well, we have this fair value gap right there. So now we need to see, is that a strong fair value gap? Well, is it in context of the weekly? On the weekly, we are creating this fair value gap that is sitting right there. Again, price might want to reach into that fair value gap first before we continue lower. Is this in context of the monthly? Yes, it is, because we have that monthly draw on liquidity that is sitting right there. Now, if we go back into the daily time frame, this was that monthly first draw on liquidity right there. Then to show you an actual live example that this does work in a live chart, everything I'm showing you here is just to get your mindset prepared before I show you it in live conditions. Because again, it's all fancy in hindsight. Does it work in real time? Yes, it does. Using these exact concepts, we, in a masterclass exclusive, we had a Discord live session and we were able to catch an exact trade using this as well, which we are consistently doing. If we keep in mind this daily fair value gap that is sitting right there, and we now go into the 1 hour time frame. So we have this discount array and that premium array right there. Here we are on the 1 hour time frame. This was this monthly draw on liquidity right there, and we also had this daily fair value gap sitting right there. If we follow along with price action right here, what are we seeing? We are seeing this fair value gap higher. That's interesting. Price might want to reach for that daily fair value gap that is sitting right there. What is happening afterwards? We are disrespecting that fair value gap by a new fair value gap. This fair value gap is what? It's high probability. Why is that high probability? Because the current draw on liquidity is that monthly right there. That monthly draw on liquidity. So it's in context again. So this right here, this fair value gap, the 2 rules has been checked off for a strong fair value gap right there. Then afterwards, what are we seeing? We are creating a new fair value gap off of that. So what usually happens? The 3rd rule. When price is creating a new fair value gap off of the previous fair value gaps, that is high probability. Remember the order blocks, what we talked about? When a new order block is created off of a previous PD array, that is a high probability order block. The same for your fair value gaps. The fair value gap being created off of a previous fair value gap sitting right there. Now, what is happening right here? This is what we were looking at in the live session. We had this fair value gap right there, that bullish fair value gap. We had this bearish fair value gap. Both are getting disrespected. We don't have any bullish fair value gaps being created in this leg higher. Still keeping in mind that monthly draw liquidity that is sitting right there. That first monthly draw liquidity. If we are continuing lower, what can price do? It can come into that 1 hour fair value gap, sting into it, and continue lower off of that. Then if we dive into the 1 minute time frame right there inside that 1 hour fair value gap, then right there during equities open, we have a sting into that 1 hour fair value gap. What are we doing? We are doing the same exact thing as we're doing on the higher time frame. Only now we are taking an actual entry. We have this bullish fair value gap. That bullish fair value gap is getting disrespected by other fair value gaps. So that right there is your high probability fair value gap, as well as that fair value gap sitting right there. Then afterwards, we wait for a new fair value gap lower off of a previous premium array. they're right there. That fair value gap is where we took the entry, covered this high right there. That is your high probability fair value gap again, because it's in context coming off for previous PD array. That is high probability right there. And our target was around a 1 to 2 right there, which was exactly that low first, a 1 to 2. Perfect. Then eventually, again, that 1 minute is not in context anymore of the time frames above it. So do you want to keep trading the 1 minute whilst we are here? No, you want to zoom out again. And then the target, which we mentioned, was on the 1 hour, this low right there. So once we reach that low, what can we see? Well, we have a huge and aggressive reaction higher. We are disrespecting this fair value gap that is sitting right there with a new fair value gap being created right there. So which one is currently your higher probability fair value gap? That fair value gap as well. Why? If we pay attention to detail, this fair value gap has already been traded into once. So again, when we trade into fair value gap the second time, it is already weaker. It's already been used up. So when we see this fair value gap, that bullish fair value gap, and we come into it right there, we have weak fair value gaps right there. We have bullish, strong fair value gaps. So what can we look to target? Well, what was above price action right here? That daily fair value gap. Again, for the members of the money making team, this was all mentioned. Just using the exact concepts that I'm trying to teach you right here. And then afterwards, of course, we can see that we deliver higher, respecting the bullish fair value gaps, and we deliver towards that daily fair value gap right there. Then once we reach that, what could we expect? A rejection off of that right there, disrespecting that bullish fair value gap, which is already an indication that that is your higher probability fair value gap. Now, of course, we need to reevaluate the week as ended. So we want to wait for that weekly fair value gap to be created as well. And then we want to start all over again. So to sum it up, strong fair value gaps are what? A strong fair value gap is first rule in context of the time frames above it. Second rule is a fair value gap that disrespects another fair value gap. So a bullish fair value gap either disrespects a bearish fair value gap, or a bearish fair value gap disrespects a bullish fair value gap. The third rule is fair value gap that's coming off of a previous PD array. Those are the rules for your strong fair value gaps. Then we have weak fair value gaps. Weak fair value gaps are fair value gaps where price doesn't follow through, where price stings into a fair value gap for 2 times, 3 times, etc. And is not in context of the time frames above it. That is when it's lower probability. So those strong and weak fair value gaps, they are telling you a story. And that story, that is your draw on liquidity. And that is your entry. That is everything. So when we have bullish, weak fair value gaps, and we have strong, bearish fair value gaps, then what is the draw on liquidity? The draw on liquidity is on the downside. It is bearish. So we want to short price when the time frames are in context of one another. Then, of course, you could call it the extra rule, is where we have the one fair value gap rule, the standalone fair value gap, and the overlapping fair value gap. We now know when price wants to trade into the standalone fair value gap and continue higher off of that, or into the overlapping part as well. We now know what the draw on liquidity is only using fair value gaps. We got to live entries. We knew where the market was trading just using fair value gaps. Again, you can do the exact same thing. It's very important to understand. I'm trying to protect you here. I'm trying to protect you from all distraction, from all these weird PD arrays that you don't need. If you're using 1,000 PD arrays on your chart, then price is very random. And you might just as well switch to easy support and resistance if you're having 1,000 PD arrays on your chart. So using the strong and the weak fair value gaps, they tell you a story. And that story is extremely important. Now, if you like this, then I can guarantee you, and the money making team members will tell you as well, you will love the mentorship. So if you're interested in that, link in the description. That is where we see people getting funded. The money making team absolutely smashing it. Live conditions, no hindsight right there. And of course, we have the free weekly forecast in which I do the exact same thing. Now, feel free to share this with a friend as well who's stuck in this cycle of using 1,000 PD arrays and, ooh, when is this new PD array? When is this new DLC dropping? Feel free to share it with him or her. And let's make this trading industry a little bit more honest and a better place. All right, perfect. Thank you.